Hello everyone, and thank you for joining today's event, which marks the official launch of the Digital Euro Association's newest working group paper on the role of stablecoins and financial sovereignty. I'm Anne-Sophie, and I'm Executive Director at the Digital Euro Association, and I've had the pleasure of contributing to this paper alongside my colleague Conrad, who headed up the working group with our chairs Kenny and Victor, and we also have Professor Peter Bolfinger join us today, who was also instrumental in shaping the debate. So thank you all for taking the time and diving into our findings with me today. And for our audience, please feel free to also ask questions in the comment section as we go, and we will aim to address those at the end of our session. So let's get started. The question of financial sovereignty in the digital money landscape is an increasingly hot topic these days. So to begin, Conrad, 3 months in the making, could you perhaps shed some light on the timeliness of our paper? I think you're on mute.
Sorry about that. Thanks a lot, Anne-Sophie, and great to be here and finally on this side of the hurdle. It has been 3 months in the making indeed, and a big thank you to everyone that has been involved, especially co-chairs and all the other participants. So yes, of course, maybe just jumping right in. Why is this paper timely? I think many people would understand why, but essentially, the developments around stable coins across the globe with various major jurisdictions seeking to officially enact or adopt certain stablecoin related and specific legislation, including the Genius and Stable Acts. We've also seen something out of Hong Kong as well, and of course MiCA as well on its way in Europe. The role of stable coins has certainly, grown from just purely parking profits in the crypto trading domain to more, established use cases. And as a result, market capitalization has reached upwards of 250 billion of late, and trillions in transactions, obviously rivaling established payment networks. So, all of these movements, especially discussions by European, leaders about the potential impacts of these instruments, whether it be locally denominated or foreign denominated, on sovereignty, whether it be monetary payments and other, really caused us to have a deep dive perhaps on this topic. Which also fits very well in terms of, or aligns very well with the 3 pillars of the Digital Euro Association, which include, education, community and collaboration, and public affairs. We feel it's important to educate the general public and pioneer such research, essentially, such that we give a balanced view on such important topics. I think, this paper, of course, also highlights different aspects of sovereignty, but also different classifications of stablecoins. But with that said, we also want to mention, I think I should also mention this, that we do support the continued development of a diverse and competitive stablecoin landscape. So this encompasses, a wide range of denominations and technological approaches and other forms of digital money. However, within this dynamic environment, this paper specifically has a focused analysis on this crucial dimension of the role of stablecoins in shaping financial sovereignty. And that's maybe just a little bit of the background around the paper. I don't want to dive into it too much. I also want to give everyone else perhaps a chance in terms of why they might feel that this paper is now quite timely.
Yeah, thank you, Conrad. I mean, we will get into it in more deep detail. But as you say, so the intersection between stablecoins and financial sovereignty is rightly drawing increasing attention these days. But to, like you say, also maintain some balanced perspective, they may have transformative potential, but they're not, well, not quite there yet in terms of mainstream adoption in many jurisdictions. Professor Bofinger, if you could perhaps help us set the stage a bit further here.
Yeah, thank you very much. Thank you very much for participating in this panel. I think it's important, with all the political debates and the euphoria about stablecoins to put it a little bit into perspective, because we have seen a strong growth of market capitalization from 2020 to 2022 and a little bit of increase in the last few months. Still, the stablecoins are kind of niche products. So the market capitalization of stablecoins is about 1% of US M1 and almost the same relationship to Euro area M3. So it is still a niche product. And this is one aspect to see that so far it's definitely not a threat to monetary sovereignty. The question is what potential it has. And I think here's also one important point when one asks what is the potential for Europe, for European issuers, for the euro as a denomination country. So we see the problem that there are strong tendencies of a kind of natural monopoly or duopoly for Tether and US coin, and also for the US dollar as a denomination country. And we can explain this economically because there are these network effects. And so the challenge for Europe will be to somehow break this kind of duopoly, monopoly. And that's definitely not an easy task. But I think we have recommendations in the paper how to deal with it and how to make how to do something against this Tether, US coin, and dollar dominance.
Yes, we certainly tried offering, a holistic view here. And maybe before we get started, really, something important to note is that as not all stablecoins are also created equal, we draw core distinctions between foreign and local issuance as well as denominations. So to provide some detail, this matters especially because these differences shape everything from legal enforceability to monetary control and data jurisdiction. And maybe Conrad, you can support me here. Could you briefly tell us why the distinctions here matter?
Yeah, so thanks, Anne-Sophie. Maybe just a background on how we arrived at this. I think through many discussions, really trying to get to the bottom of, the true impact of stablecoins on the dimensions of sovereignty that we discuss in the paper. It was necessary for us not to just speak about stablecoins in a blanket format, because we do know that stablecoins have different denominations and also have different issuer domiciles, essentially, where they're incorporated and where they're issued from. And because we're looking at their role on sovereignty, these classifications, these types of stablecoins, as per the classification, depending on where the reference jurisdiction is, and in this case it was Europe, of course, would have a varying and let's say a different impact on the different dimensions, but also a varying impact in terms of its magnitude, right? So the first classification, of course, is locally issued, locally denominated. That's a stablecoin, of course, that is issued from within the jurisdiction and also is denominated in the actual official currency of that same jurisdiction. So those have some of what we have, described as somewhat of a milder effect on certain types of sovereignty. And then the next category are locally issued but pegged to a foreign currency. We do have a couple of those already licensed under MiCA. And also MiCA treats such stablecoins slightly differently to the ones that would be locally issued and locally denominated. Then you have, of course, from a foreign issued perspective, you've got the foreign issued stable coins, but they are pegged to a local currency or the reference jurisdiction's official currency. So for instance, USDT or Tether is issued out of, I think it's El Salvador, but it's basically issued outside of the United States because they're domiciled there. However, they are pegged to the official currency of the United States. And that has a different type of implication in terms of furthering the dollar's, visibility globally, let's say. But it also perhaps falls outside of that regulatory view that the United States has to some extent. And we know that Tether is now seeking to become incorporated within the United States and be issued outside of the United States. So there are discussions in that regard. And that also has a different implication for sovereignty with regards to regulatory sovereignty, and also so I say regulatory sovereignty and monetary sovereignty as well. And then, of course, you've got foreign issued and foreign denominated stablecoins, which are where both the reference and the reference jurisdiction, it's issued outside of the reference jurisdiction, but also denominated out in a currency that is not of the reference jurisdiction. So at any one time in a country, I would say all of these stablecoins are operational, and they each have varying impacts. And if you really want to dive deeply into the true impact of what stablecoins, the impact that stablecoins have on sovereignty, the four that we've noted, then you have to essentially classify stablecoins in this way. There might be other ways as well, but this is the path that this paper had taken. I don't want to dive too deeply into this. Perhaps back to you.
So basically, as we said, each different type of stablecoin affects financial sovereignty differently. And just generally also in the paper, we speak about financial sovereignty as the effective control over a jurisdiction's financial and monetary systems. This is not about absolute authority. It's rather practical capacity to steer a jurisdiction's financial and monetary systems in an interconnected world. So perhaps to also, again, provide some insights, we explore how key dimensions of sovereignty intersect here. That relates to monetary sovereignty, payment sovereignty, regulatory sovereignty, and digital sovereignty. And we do this by asking what are the risks, what are the opportunities, and what should policymakers consider next. We'll start with monetary sovereignty. So traditionally, this refers to central bank control over currency and monetary policy. Stablecoins, and especially the foreign denominated ones, speaking from a European perspective, could weaken this by inadvertently enabling some sort of typically digital dollarization. At the same time, though, there's an argument in favor of euro-denominated stablecoins strengthening the international role of the euro, as it purportedly does for the dollar. And if we now unpack this a little bit, Professor Bofinger, do you consider stablecoins as a threat to monetary sovereignty? I know you said no, but what about foreign denominated ones gaining traction in Europe?
Well, I don't think that foreign denominated stablecoins could play a major role in Europe, a role that would really reduce the ECB's ability to control the money supply and to control the price level. Because in order to have foreign denominated currency to play a major role in a country, you normally need a very unstable domestic monetary system. So you can observe this in some countries with high inflation, that dollarization takes place. But as long as the euro is a stable currency, I don't expect dollarization due to stablecoins. Under normal conditions, currencies like language, people are accustomed to it, and to change the language, which means to shift from the euro to the dollar in everyday transaction, is something which is very unlikely. So I don't see this risk for the ECB.
Okay, and generally then on the other hand, do you consider locally issued and regulated stablecoins as an opportunity for strengthening monetary sovereignty in Europe?
Well, so what you could have is if you are able to create a foreign demand for euro-denominated stablecoins, of course, this could increase the sovereignty. But here we have the problem of MiCA, which I think is a very serious problem, that stablecoin issuers in Europe must back their stablecoins with bank deposits up to 60%, and that's completely different from the backing of the dominant stablecoins like Tether, who have almost to 80% or more backed their stablecoins with treasuries. And I think that the MiCA regulation is not a very good idea, because if a stablecoin issuer backs his stablecoins with bank deposits, must see that the bank deposits are to 90% backed by bank loans. So this is completely different from the US story, where you have these treasuries. So I think here MiCA must do something, because otherwise, if you have major stablecoin issuers in Europe, then you get an interconnection between stablecoin instability or bank instability, which could lead to very, very problematic situations. So I think here a reform of MiCA is definitively needed.
Yeah, certainly reserve asset composition is a very hot topic here and is very important to think about, especially like you say, there's, a few inconsistencies arising with MiCA, and we might actually fall behind other jurisdictions. So perhaps maybe one of the other ones, maybe Victor, do you want to participate here? If Europe fails to act on these reforms, let's say with MiCA, could that put the EU at a long-term disadvantage, especially compared to the US maybe and Asia?
Well, yeah, hello everyone. Absolutely. The current regime is unfortunately almost already outdated, especially when you consider the Genius and Stable Acts that are currently in negotiation across the Atlantic. So basically, in the US, they prepared this great regime for systemic stablecoins that should be ready already by next week with the adoption of the Genius Act, which will mean that you will have basically a great attraction of capital, of investors, and probably also entrepreneurs across the Atlantic, because the Genius Act will create, the framework for systemic stablecoins, like probably a new USDT based in the US, for instance. And on top of that, it will also create the environment for innovation by, for instance, allowing experimentation for small amount wallets, non-custodial wallets in the DeFi space, for instance, something that we don't have in Europe. So basically, with MiCA, we have a framework that basically supports the banks in Europe. If you're a bank, it's perfect. You can have your own stablecoin. But as you pointed out, the fact that you need to tie your stablecoin to 60% of deposits is probably a big infringement to the development of the market in Europe, which is why probably you don't see, as you see in the US, this consortia of banks willing to create a stablecoin together. You probably saw this announcement of a new stablecoin that would come to challenge USDT and USDC in the US. With big banks like JP Morgan, Morgan Stanley, etc. You don't see anything like this in Europe at this stage. You rather see an association of existing banks with crypto actors like Circle, which actually means that the European financial sector does not see MiCA as, nor the pirate regime, of course, which did not produce any satisfying infrastructure at this stage. The European financial sector does not see the current regulatory framework in Europe as sufficient to incentivize innovation and to create the conditions for the expansion of a real stablecoin market denominated in euro. So yes, we are at a big disadvantage compared to the US. And compared to Asia, I think the situation is a bit different. They will probably keep on attracting maybe all these actors that do not want to be regulated. And we know that we do have, you said, Mr. Bofinger, that we don't have an issue with foreign issued, foreign denominated or locally denominated stablecoins. I don't think it's entirely true, because you observe these gray areas, where actually the regulation is not clear and where consumers in Europe can actually access usually overseas platforms that are located in Asia to transact in USDT, which is not listed anymore on European platforms. So it's true that you had a big reduction of the use of USDT after the introduction of MiCA, starting from 2023 and even more in 2024. But it does not mean that you can totally prevent Europeans from using these unregulated stablecoins. And if, because we expect the stablecoin market to expand tremendously over the next years, maybe tenfold or even 20-fold, 30-fold, if you have an explosion of the use of USDT, this could also create repercussions on the European market, at least with European consumers that are already using USDT. So I think this unregulated space, rather located in Asia, is another threat for Europe. So yeah, threats both coming from the US and Asia.
I think, as you rightfully say, the future potential explosion and explosive use of stablecoins, which are especially pegged to the US dollar, creates a bit of a similar scenario to what we see in Europe already with payments. So today in Europe, much, if not most, of digital payments still run through US-based networks like Visa, MasterCard. And now we have this second pillar, if you will, whereby US dollar denominated stablecoins might gain traction. And having realized the risk that comes with such external reliance, Europe has also become increasingly loud about strengthening autonomy and reducing dependence on foreign payment instruments. So we're now in the section of payment sovereignty, whereby, it is important also to note that stablecoins offer real potential and are not just considered a threat because they also enable fast programmable payments with lower costs, and especially across borders, we've seen all of this. But to actually dig deeper, maybe Kenny, you want to chime in here. What role do you see stablecoins playing in the future payments infrastructure in Europe?
I think that in order for stablecoins to kind of meet their potential, there needs to be a better bridge between the systems that exist today and the emerging systems that we see in the DeFi or permissionless space. And what we're seeing right now is the biggest demand where domestic payment systems are the weakest. So we're seeing adoption for cross-border use cases so you can avoid correspondent banking. We're seeing adoption in countries like Professor Bofinger mentioned, where the local currency is not very stable. And I think that for stablecoins in domestic markets to really grab a foothold, we need, one, better user experiences, and two, new use cases and the type of use cases that can be enabled by this kind of programmable money, but not just programmable money that's kind of top-down, centralized in design. What's really exciting about stablecoins and the permissionless blockchain space is the rate of innovation, because you've got all this open source code, you've got people who can innovate with fewer boundaries. The private sector moves at a speed that something that's centrally designed will always struggle to keep pace with. And so when I hear calls from European policymakers who are worried about the threat of overseas stablecoins, calling for the digital euro as a solution, it feels to me as a bit of a mismatch. If you've got infantry at your border, the response is probably to send infantry to counter it and not to commission a battleship that might not be ready for 5 years and might not serve the need at hand. And so I think that Europe and almost every jurisdiction needs a solid stablecoin strategy to promote the responsible innovation and use of these new products.
Yeah, I think you bring up something very important where yeah, Conrad, please go ahead.
Sorry, Anne-Sophie. I don't know where to raise my hand here. Maybe I should do
Yeah.
that. I totally agree with Kenny. I think it's a fit for purpose, and we mentioned that in the paper. If you feel a threat from stable coins or foreign denominated, then perhaps you should get something that can meet the challenge. And maybe the digital euro certainly has a place, especially talking about promoting an active ecosystem of multiple monetary forms, public and private. So like the digital euro and other CBDCs certainly have a role. However, it may be limited in its ability to safeguard against some of the threats that are being articulated by certain institutions. But I also just want to double back just slightly to monetary sovereignty, because as Professor Bofinger indicated, that of course the risk of dollarization in a strong economy like Europe perhaps is not likely, and is more likely in countries with more an unstable economy, essentially with with a weaker currency. There is another form of currency substitution that we do bring to the consciousness in the paper, and that is the digital dollarization. So what we essentially in 10 seconds talk about here is that unlike the risk of fiat being replaced for everyday transactions like groceries, buying milk, and what have you, there's a digital economy that's emerging, a natively digital one, in the form of DeFi, crypto asset trading, and tokenization of real world assets, at least, and trading and that type of thing. And in that realm, the USD has already taken hold. I mean, for instance, when we talk about Bitcoin making an all-time high, we don't say, oh, it's made an all-time high in the Canadian dollar, even though it might have, or the euro, for instance. We talk about it in terms of United States dollars or the USD, right? And I think there is definitely something to be said in that regard, in terms of strengthening the role of the euro in that realm, because that realm is going to continuously expand as time goes on, especially with the digitalization. I just wanted to bring that point because I think, and I see Kenny smiling, because that was definitely a point that we had raised, and I think it's something that gets overlooked quite a bit, especially in this in these types of discussions.
Yeah, and I think
May I make a short remark on the digital euro as a response to the stablecoins? So the ECB is now pretending that the digital euro could be a response to stablecoins, but as was already said, I think this is definitively not the case, because the digital euro will be designed for domestic retail transactions, while stablecoins are mostly in demand for wholesale transactions across the border. And so with the digital euro, which is limited to relatively small amounts, I think this absolutely it can only be used within the euro area. I think that's definitively not the answer. In addition, in countries with unstable monetary regimes, the stable coins are also held as stores of value, even if they are not interest bearing, but as a substitute for the US banknotes that were held so far as store of value. But the digital euro definitively is not designed as a store of value with its very low holding limits. And so I think it's important, I think also for the ECB to realize that the digital euro can definitely be not the answer to stablecoins.
Yeah, I do think we also make that very clear in our paper, right? We want a dedicated response. We don't want artificially pushing a digital euro as a response to US stablecoins. We actually want all these solutions to coexist, like Conrad said in the beginning. We're very, very loud about that of a digital euro association. So I guess in that sense, maybe what we should talk about is how the public and the private sector can work together on the infrastructure and together on developing a response. Maybe Conrad, I think you got something to say about that.
Yeah, I think in general, and Sophie, I'm sure everyone else could chime in on this as well. But I think the solution is really a collaborative approach between public and private. Both need to come together towards responding appropriately, fostering innovation, while at the same time, safeguarding the jurisdictions that the institutions protect. So we talk about enabling technologies like digital identity in the paper as well. We acknowledge the role of public sector alternatives like CBDCs, for instance, because they certainly have a role to play. And also, of course, beyond the infrastructure, we also talk about how regulation can in fact enable all of this to thrive, unlocking certain rails and also value through a steady or certain regulatory framework. And these tend to be leveraged, leveraging the strengths of both public and private complementary strengths, essentially, is the way that we, in fact, see the future of digital money, progressing. Yeah, beyond that, I wouldn't have too much more to say.
May I add maybe something about that?
Please do.
Sure.
Yeah, so about proprietary European crypto infrastructures. So as I hinted earlier, the private sector is proposing layer 2 solutions on top of certain public blockchains. That's under study currently at the SMA, the pilot regime that has been implemented over the last years. But those are not very convincing solutions to propose sort of encompassing European infrastructure that could be equivalent to, the blockchains that you can find out there. So basically, I think when you think in terms of geopolitical competition between the US, China, and the EU, it's true that you need to put the emphasis on these European infrastructures as sort of a backstop solutions if either the US or China wants to, use the financial dependencies they have on us, basically, which means, for instance, okay, developing a digital euro, probably not for retail. I mean, not only, and I totally join Mr. Boffinger on this. I mean, it's not the priority, and we don't see real use cases for this retail CBDC in the EU. Nevertheless, for the wholesale arm, there is definitely a market. At least there is a demand within the established financial establishments in Europe. It's been there for years, and now you have, these three competing projects, one in France, one in Germany, and one in Italy. Apparently, they want to implement the three, so I don't know exactly how it's going to work, which means that you won't have a unique European infrastructures in terms of wholesale CBDC, but multiple ones. Okay, so that may be the start of an answer, when you consider the need for these proprietary European crypto infrastructures. But as I said earlier, on top of that, you don't see convincing private alternative, directly coming from the private sector, even considering the different solutions that are introduced in the context of the pilot regime.
Yeah, I think
If I-
that, yeah. Can you
Oh,
please?
sorry, I just wanted to add one thing, is that one thing that we're fairly clear about in the paper is that financial sovereignty isn't necessarily, or maximization of financial sovereignty isn't necessarily a de facto goal. And we saw that with the creation of the euro. All of these countries that adopted the euro gave up some financial sovereignty for other benefits. And I am personally a big proponent of public blockchains, incredibly neutral public blockchains. And so for me, building an infrastructure that is jurisdiction specific isn't necessarily the way forward, and that supporting this kind of credibly neutral infrastructure that's not owned by anybody and supports everybody equally could be a benefit. And I know Victor and I have disagreed on this one a little bit in the conversations that we had when we were writing this paper, but I think that there are some very good public blockchains out there, and that the space will continue to grow. It's still only 10 years that we've had smart contract platforms. If Europe is worried about control of these, we could get more European node operators. We could get more support and input onto these public blockchain infrastructures. For me, it's a great substrate and something that prevents some of these interdependencies, but creates a globally connected rail instead of disparate systems that struggle to interoperate with one another.
I agree with you, Kenny. I'm not against public blockchains at all. Just, to come back on what's in the coming regulation in the US, they expect to be neutral, not in terms of the public blockchains that I use, not what we call usually credibly neutral public blockchains, but, just in terms of whether the blockchain is going to be public or private. So, which means that in the coming infrastructure ecosystem related to payments, related to financial sovereignty in the US, in Europe, and elsewhere, you will probably have this coexistence between public blockchains and maybe private blockchains. So we don't really know, if this will be exactly working like a blockchain, but that's still under investigation. And when I, talk about OCR CBDCs, I really mean, sort of this settlement layer that will work in sort of a decentralized way for European financial establishments to create their own layer 2s, DeFi products on top of this.
I think if I could just also chime in there, I think we would be remiss not to mention perhaps the Wyoming stable token, just to further blur the lines between private and public money to some extent, stable coins at least. And I mean, if you look at the infrastructure that they're looking to build upon, it's public blockchains, public permissionless. So you can check out their website. They've had a couple of tests already, looking to launch, I think, soon. And I think this is an interesting development by a state within the United States, issuing their own stablecoin for various purposes on public blockchains, as it were, and they are going to seek, certain safeguards in terms of the control, and they have an appraisal format that they utilize to rate different blockchains. I think that's quite an interesting project, and it's something that perhaps policymakers could have a look at in terms of trying to determine whether these are fit for purpose going forward.
I think one thing that's definitely becoming clear here is that the facets of financial sovereignty are quite blurred. I think in the last 5 minutes, we discussed regulatory as well as digital and monetary and payments. So I guess it's becoming clear why we try distinguishing, but it is not that easy. So maybe picking up on the point about the public versus private one, do you believe that permissionless networks can actually also coexist with the European approach towards data protection and security and also its sovereignty goals? Maybe Kenny?
The European perspective. I mean, I think that as far as data protection regulation goes, Europe tends to be quite extreme.
Generally quite regulatory heavy, yeah.
Yes. I think some of the views that we've seen come out recently are incompatible with today's networks, let's put it that way. But also, I would be the first to admit that some of what we have today on the public blockchain space isn't necessarily fit for institutional adoption or potentially wider mainstream adoption, and that we do need better solutions around privacy and data control on public blockchains so that we can preserve anonymity in user privacy, but also improve tracking. ML/CFT is an area that traditional finance has struggled with, and the traceability aspects of blockchain offer some avenues to improvement, but we're not there today. And so we need to, and the industry is working on this, and I speak with numerous people at different blockchain foundations who are developing privacy preserving or anonymity preserving technologies that also allow for this kind of auditability and regulatory control. And we're not there yet, but I think that within the next couple of years that we'll really get to a place where it's a win-win-win for end users like ourselves. You've got better personal identity information protection than you do today, but also the regulators and monetary authorities will have better control and traceability, and then we'll also unlock some of these new use cases on these highly innovative rails that unlock new potentials.
So you do believe that there are viable models for, effective stablecoin infrastructure also on a global level, but do you think there is a way to use European infrastructure as well, or will there always be this element of foreign dependency here?
I mean, there's nothing stopping European companies from innovating in this space, and I think that's what we need to see more support of, is more public sector creation of an environment that supports innovation in the private sector, as Conrad was speaking to earlier. But we're seeing a number of technologies emerging, and there are European companies working on technologies like zero-knowledge proofs and fully homomorphic encryption. Whether everything needs to be housed in Europe, if we need full European data centers to run nodes that validate the networks, I'll hand over to Victor, because I know he's got some thoughts on the European infrastructure in terms of data and digital.
Thank you, Kenny. Yeah, so I actually, yes, what's really funny is that there will be this coexistence, but not because both will propose, innovative, so there will be sort of a innovation competition between the public and private systems, but because they will pursue different objectives, I think, because the most innovation is occurring in the public blockchain space. And I think this will remain that way. because that's the environment. That's where actually it's quite easy also to innovate and to take a couple of risks, especially with the new US setup, and in Asia. And yeah, you don't have to always respond to the regulator. So definitely, if you still have this coexistence between public and private blockchains, you will have innovation mostly occurring in the open source space, because open source is always also a way to improve your innovation because you have more people working on it, so you can detect the inefficiencies, the security flaws, etc., etc. But the private blockchains will also exist because they will be, at least on the paper, more trustable for established financial establishments, at least at this stage, because we don't have sufficient solutions to make sure that you won't be hacked on the public blockchain, to put it very simply. Because when you survey all the specialists within big banks in Paris, for instance, when you just discuss with them a bit about public blockchains, they always say, well, I won't sleep well, if I decide to use public blockchain for my clients tomorrow, and I want to sleep well. So I think proprietary systems are still worth something in the coming financial infrastructure environment, whatever happens, but for different reasons. So then the objective is probably to take the better of both worlds, and the Circle Payments Network sounds a bit something like that, because it's like you have the advantages of the public blockchains for stablecoins, so the rapidity, the efficiency, the low cost of public blockchains, stablecoins running on public blockchains, and at the same time you have the safety of big banks, etc., etc. So yeah, that's probably the objectives of the next years. Both accompanying the explosion of the stablecoin market and finding sort of this coexistence between public and private infrastructures.
Yeah, I think that's a very important thing, because ideally the EU would want to ensure that stablecoins integrate with the existing financial and settlement infrastructure, right? So we want to integrate and enable innovation, but also not lose sovereignty and control. So would you agree that then integration is the aim? And first of all, and how would we do that? Or do you also believe that while maybe payments network bridge is the interim solution, eventually these emerging systems will replace existing ones?
Existing systems are going to be around for a while. I mean, they took a long time to develop, and as Victor mentioned, work is being done to improve them across a number of different central banks and also in the private sector. And we're seeing solutions emerge. Tony McLaughlin from Citi, he just recently left Citi to build a settlement infrastructure for stablecoins that essentially bridges the old world and the new, much like Victor was saying. So you do get the best of both worlds. You get the global reach, the connectivity, the innovation space, but you anchor it in traditional concepts like the singleness of money and mitigating counterparty risk, and integrating with where users are today, and bringing over some of the trust that a number of users have with their existing financial institutions. And so, yes, it's a spectrum, and there will be many different parts that come together. I think that in a few years, we won't really think of traditional finance and DeFi as being two different things. It will just be finance, much like in the early 2000s, you had internet companies and regular companies, and now we just have companies, and most of them do something across both spaces.
Yeah, I do think that we will see some sort of mainstream adoption here of the decentralized elements. And that is also something that in Europe especially, but also globally, is sort of trying to be accommodated in a regulatory framework. So to finalize our 4 dimensions here, let's talk a little bit about regulatory sovereignty, which means having the capacity to apply and enforce rules effectively within one's jurisdiction, which is a bit of a problem with decentralization. And similarly, stablecoins can also circumvent national jurisdictions, especially if they're issued offshore or they run on decentralized infrastructures. And the EU might have MiCA, but even with that, as we said, concerns still persist, especially around regulatory asymmetries and unclear provisions, DeFi is not covered at all. Decentralization is generally vaguely defined, and stablecoins as a payment infrastructure are not even fully addressed. So generally, we see some shortcomings. As Victor said, I think it's not quite there yet. What do you think can be improved?
Well, I think the Commission right now has to be observing, scrutinizing very thoroughly what's going on in the US. If the objective is to keep investors and entrepreneurs in Europe, which means that they should take the opportunity of the DeFi regulation that they are talking about for years already to update, the entire stablecoin / DeFi / crypto ecosystem regulation for Europe. So at least, leveling up to what the US is doing would be probably the right way to just have this level playing field between the US and Europe, in terms of attractivity for crypto players. So that would be probably, one answer. So allowing DeFi to be experimented in the EU, which is currently not the case, also because you don't have this EU market in the crypto sphere, in the stablecoin sphere, which means that you also need to take care of that. And this is the second aspect. And this could also come, within this update of the entire crypto ecosystem regulation for Europe, which means, for instance, making it easier for banks to issue a stablecoin, probably by reducing, the amount of deposits you need to allocate in terms of reserve for your stablecoins, and use more treasury bills, which would also increase the demand for treasury bills and decrease interest rates in the EU, like it would in the US. One probably big reason that explains the fact that the Congress right now is moving really fast on the Genius Act is that there is this sort of emergency in terms of US Treasury bond rates on the bond market. It exceeded 5% over the last weeks, and that's a bit unprecedented. So they need to find a new demand for these bonds. And we have a similar problem in Europe. We will have in the coming years more demand, more supply of bonds from governments to finance, our defense objectives, the ecological transition, et cetera, et cetera. So that would probably also be a good idea if, the stablecoin liquidity could be used for that purpose. So the Commission probably has, something really simple to do here to actually ease the emission of stablecoin, and that is, releasing the constraint related to deposits used as reserves for stablecoins in Europe.
Conrad, I see you're itching to say something. Yeah.
Yeah, I just want to make sure that I touch on these 2 points, and I also want to give Kenny's input here as well, because I know he's added some really valuable inputs here. So 2 impacts, potential enhancements that stablecoins could have on regulatory sovereignty. First mover advantages, right? So shaping global norms. Of course, those jurisdictions that embrace stable coins will have to obviously establish a regulatory regime similar to MiCA, and thereby be a first mover in terms of shaping what could potentially become global norms. And those who are second movers, of course, will have to more likely to follow the jurisdictional precepts of another jurisdiction. And then secondly, enhance supervision and compliance through like Kenny said, the traceability and auditability of the blockchain could potentially enhance the supervisory and compliance of these flows. I just wanted to give Kenny the mic, perhaps, because I know he's had a couple of inputs there.
Yeah, also just
Thanks.
before you say that, I think Professor Bofinger will have to leave. So I already want to thank you for joining and have a nice second, you have another speaking engagement. So thank you for joining, taking the time
Thank you.
before we, yeah.
Bye-bye. Thanks.
Thank you. I also need to jump to another engagement shortly, but I just want to say on the first mover advantage, although we're just now seeing national legislation being proposed in the US, America already had the first mover advantage in terms of stablecoin regulation through the New York Department of Financial Services. And they've really written the playbook that everyone around the world, except for MiCA, has followed. MiCA bucked the norm, and I think that divergence has really hurt the European stablecoin issuance model. As Professor Bofinger said, and as Victor said, the difference in reserve assets, the difference in operational requirements for issuers places a higher burden on issuers out of Europe. And yes, they've what seemed like a first mover advantage in MiCA, I think might not be. And I've been hearing European central bankers stating that MiCA probably needs to be pulled apart and that you need separate stablecoin regulation enacted quickly in order to preserve some financial sovereignty, rather than waiting for a comprehensive MiCA 2.0 package. And similar to what they're doing in the States with Stable and Genius on one hand and a comprehensive markets bill being proposed separately. Crypto capital markets and stablecoins as kind of payment instruments are two separate things. And I don't think you want to be out of step with the rest of the world on stablecoins because of their nature as these borderless instruments. It's very easy to get left behind. And as I've said several times so far in this conversation, you want a public sector that supports the innovation of private stablecoin issuance, so that you can harness the benefits of that innovation and of all the advantages that it can provide.
Yeah, I think also it kind of rounds it up very nicely. And if I can start with you, Kenny, and then hand over to Conrad and Victor as well. Let me ask each one of you to finalize this. If you could make just one recommendation to policymakers when it comes to stablecoins and sovereignty, what would it be?
Create a supportive environment, harness the benefits that you can, and treat it not just as regulation or legislation, but as a strategy. Countries have an energy strategy. You need to think about stablecoins in a similar way. It's what are the end goals that you're trying to meet, not just what are the risks that you're trying to prevent.
Conrad, what would your one recommendation be? I think you're on mute again.
Sorry about that. I think for me, it would be for regulators to remain agile, kind of alluding to what Kenny said. I think this market moves really quickly. And, when you're dealing with somewhat exponentials, we're seeing converging technologies now, which could further accelerate the adoption of these technologies and their influence potentially. Therefore, remain agile, monitor things really closely. Such as, like Kenny said, you're able to harness the benefits. So just be very vigilant and also have cross-border discussions with other jurisdictions towards an establishment of a more global or harmonization around stablecoin standards.
Victor? Yeah.
Well, we just detail something that I said earlier, but to me, the priority is really to expand the market for euro-denominated stablecoins that are issued locally, by probably leveraging DeFi, because when you see where the market is also in the US, and this is a market that is very different from the one in emerging markets, it is in DeFi, in composability. In emerging markets, you rather use stablecoins either to receive international payments, coming from developed countries, or as a reserve of value because you have this unstable monetary environment in the legacy financial sector. But it's a bit different in the developed countries. So you need to really look into the future of the market within the EU, within the US, it is actually in DeFi. So since the Commission has been working for years on a DeFi framework, and I'm sure they have something, there are some drafts moving around. They should probably, use all the knowledge they've gathered to actually produce a regulation that does not constrain the DeFi market in the EU, but rather help it, right? As Kenny said, and that could be also, this European strategy that actually helps improve adoption for stablecoins. So DeFi here, that would be, for instance, very concrete use cases for companies, for instance, like intraday or intra-business operations for companies using stablecoins. And I mean, the Commission has probably the tools, and maybe the ECB as well, but rather the Commission here to help the market develop in the EU, because without a market, there is no reason actually to even think about preserving our sovereignty.
Yeah. So what we can say is definitely that Europe now has a window of opportunity to shape the future of digital money that includes stablecoins, and to do so with foresight and coordination, as also Conrad highlighted. Kenny, thank you for joining. Also, good luck with your other speaking engagement. And if Europe also wants to do all this while remaining sovereign in the digital age, then it must act strategically, as Kenny just said. So that would entail, as we also discussed, strengthening regulatory clarity, building interoperable infrastructure, and enabling trusted forms of digital money. And to do so, like you said, Victor, on innovative and emerging solutions. So overall, as discussed, there are a lot of facets of financial sovereignty here. They're all quite intertwined. We tried untangling them a little bit as much as possible. And I want to thank you both who are still here, and to all our other contributors for actually putting in so much work. And it has truly become a really good piece of work. And thank you also to our Digital Euro Association members, and without which this would never have been possible either. Our paper is now available on the website, and we've shared it on our social media accounts. Do have a look and give it a read if you haven't already. And on behalf of the Digital Euro Association, we sincerely hope that this helps advance a discussion on a sovereign European strategy for stablecoins that is both pragmatic and also future-proof. So thank you for listening, and we'll see you next time.
Thank you.
Thank you very much.